What's up, folks? It's Eric from Option Edge, and today I want to show you an earnings trade I made and how I use the different AI tools at my disposal to profit. So here's DocuSign. DocuSign was trading around yesterday. It was trading around 58 or so. I had a thesis. I said I don't think DocuSign is going to clear the overhead resistance. The overhead resistance starts around 68, 67, and then goes to 70 and so on and so forth. I wanted to reinforce my thesis by doing some checks using the ChatGPT CML Viz finance integration. So let's check that out. So I asked, what is the sentiment of DocuSign in this ChatGPT finance site that I like to use? Let it run its calculations, and presto, pops out. It gives the sentiment score a 74. This was actually a 35 yesterday. After earnings, it went up a bit. But yeah, before earnings, it was quite low. That's just one part of my thesis. And then the next one is, in addition to the AI software I'm using, I'm also using Likefolio, which mines social media data. Likefolio gave DocuSign a bearish earnings score based on these characteristics here. So I'm combining a lot of different elements. I'm combining charting, I'm combining AI sentiment calculations, and social media to make a prediction, an earnings prediction. So let's look at the options chain. So this is the option chain for DocuSign. This is of course after the market is closed, but these calls right here, the 72 call was trading at 50 cents each contract. Let's go back. So let's go back to the chart. So the 72 mark is here. So if this stock does not go above the 72 mark, it was trading around $58 before earnings was announced. So 72 is almost like a 23% move up to the upside. And historically, if we look back, the moves to the upside have been no more than 22 and a half. So, I think I'm within a good range here. I got overhead resistance working in my favor. I got a bearish Likefolio score. I also have a bearish sentiment score calculated by the AI generator that I showed you before. So overall, I'm combining all of these different tools for my disposal, and then I am making a decision. So I end up selling the 72 calls. I could have taken more risk by selling maybe the 68 calls because the overhead resistance was right about at 68. So I sold those and ended up profiting nicely. You can see the implied volatility was huge on this before earnings. So implied volatility tends to be overstated. In certain stocks, it sometimes is understated, but in this case, made out very well and profited and have some spending money to go into the weekend. So that's it.